We all face risk, and insurance remains humanity's fundamental shield against it. Yet today's policies increasingly fail to protect people. A growing coverage gap demands systematic change. Therefore, I would like to share my understanding on how actuaries can help to position the problem, to transform insurance logic from loss compensations to event trigger safeguarding. Currently, traditional insurance has a structural flaw. The rigid claims frameworks create systematic debuts. First is the risk measurement limits. For example, climate insurance needs the remote policyholders to self-prove the losses after the risk occurred and the cost delayed. In the side of the health policies, it also sabotages protections, like the diabetes riders demanding amputations before paying. If you do not meet the criteria defining additional cover, then you will not get paid, even you get the illness. This isn't bad luck, it's the systematic failure. It's actuarial rigidity ignoring human sufferings. And therefore, this is another part I want to bring is the understanding gap between the actuaries and the policyholders. While actuaries design products around loss distributions, users seek a guaranteed coverage upon diagnosis. Therefore, the event trigger insurance like the parametric insurance bridge this gap. The operational logic of the parametric insurance is to preset a threshold to auto-detect events. For example, if the wind speed have reached up to the 50 meters per second, and then the insurer's claims will be made instantly because it detects the event occurs and the risk exists. The core advantage of parametric insurance is to skip the loss assessment part and to make the claim standards by transparency by design. However, this also faces the basis risk which the triggers or the parametric settings actually do not fit the actual cases, which cause the loss on the both sides of the policyholders or the insurers. I can explain it by how to minimizing the basis rate from a little sample. And here is the trigger mechanism for the innovative product is when the original disease incidents exceed the predefined thresholds, the reserve funds are automatically allocated to all insured individuals' health accounts within that regions. And here's the assumption. You can pause it if you have some interest in it. The basic is the key finding of the basis risk optimizations. I've separated the basis risk into the false negative part and the false positive part, and each of the part is revealed each cases of misclaiming or misidentifying the risk. And you can see the false negative risk is decreased as the threshold increase, and the false positive rate have become stable until the incidence rates have reached its level. At last, it has caused the equilibrium at the 0.22 in the cancer case. Therefore, we can find that the basis risk is reducible but inescapable. But we can try to minimizing the basis risk whenever we are figuring out how to making a parametric insurance product. We are witnessing some fundamental transformations in protection logic. Parametric insurance pivots from reactive loss compensations, where we debate severity and frequency, to proactive safeguarding triggered by the probabilistic events. This is an incremental change. It's a new philosophy of risk management. At its core, the parametric insurance more focused to predict the probability of the events. It is a discipline where rule sets emerge from data-defined boundaries, continuously refined by historical validations. These are not arbitrary thresholds, but scientifically calibrated guardrails. Like all the other texts, its power lies in communications. When policyholders visualize how triggers work, trust replaces skepticism. When underwriters see real-time performance data, strategy becomes dynamic. Yet traditional actuarial models remain trapped in an outdated equilibrium, balancing insurer and insured interests while overlooking human realities. The result leads the protection gap widen as disputes multiply. Parametric shattered this stalemate. It replaced human-to-human conflicts with human-to-system consensus, anchoring trust in transparent, auditable data standards. Therefore, as an actuary, we can try to utilize how innovative technology like AI, Web3 to transform the insurance model. And in these transformations, we fulfill insurance original covenant, social solidarity through shared resilience. We are not just adjusting models, we are reprogramming the trust itself.